Hello, everybody. Welcome to the Trading with Ashley channel. We are so close to my personal goal of getting to 40,000 subscribers. So, can you help me with this video? Help me get over 40,000 subscribers. That will be a fun moment. I have been doing this on my own with my own channel for almost a year. In July, it'll be a year. And my goal is to get to 50,000 subscribers by that 1 year mark. And this is the perfect audience to help get me there. And I will be rewarding you with some incredible plays. So I am going to do a play right now that will help you make an amazing annualized return this month. And it's on United Healthcare. Now, I must say, initially when United had all of their issues, I was saying no, it was just too risky. I wasn't willing to do a trade on this particular stock. But then I saw where it really does seem to have a strong level of support, and the new CEO just invested quite a bit of money into this stock, which shows me that he has confidence on bringing it back. It's a profitable company. It's the number one insurer in the United States. So there's a lot to be said for that. And the premiums, well, you just cannot ignore these incredible premiums if you are an option seller. Now, in my community, we've been taking so many trades, and this has been a part of it. And our trades have been incredibly profitable. If you are a trader and you like to sell options, there is no better community for that. I have been calling out so many plays. I averaged about 40 plays last week and 40 plays this week. But what's most exciting is the amount of money that people are able to make selling options. So if you're interested, go ahead and don't delay any longer. We've got so many exciting things coming up, and I have some wonderful announcements that will be coming out soon. But I do tell my Discord community first, so you might want to consider that. Now, there's two different plays for you to consider. One is a traditional sold put. And for those of you that have been with me for a while, you understand how this works. You put up the money to buy a stock at a price that you think is fair. And let's face it, United Healthcare is so beat up right now that if you just bought it, it would probably be a fair price a year from now. You would see incredible appreciation. But still, we're going to take advantage of this, and you can trade it so many different ways. But the particular trade I'm going to show you, it is a sold put, and it expires in about a month. And if you were to repeat this type of trade month after month for a year, your annualized return would be over 50%. So that's really good. And the other trade, it's for smaller accounts, but you can trade it with a larger account too. You just want to control your position size with credit spreads because it is a credit spread, and it would require about $5,000 in capital, but it will yield a little bit over $500 in 1 month. Now that annualized return, that's really significant. That one's offering over 132% annualized return. But I always like to preach caution with credit spreads because they're very alluring, but they are a directional bet, meaning if you select the wrong direction and it actually breaches your strike price, then there's a lot of trade management involved. On the sold put, the first trade that I'm going to show you, if you choose the wrong direction, we still have a lot of things we can do to rehabilitate the trade and still make it profitable in the long run. So that's why I prefer selling puts, but credit spreads do have a place in an account, just a smaller place, because the returns are strong enough where you don't need to put a lot of money at risk. All right, let's go into the computer so I can show you these trade setups for this week. First and foremost, let's take a look at the technicals so we know what we're dealing with. Now, when a stock has a dramatic shock to it, the technicals don't always matter near as much as what's happening in the news and everything else. But this stock has been really shocked to its core. You can see here you have a gap down. I mean, it was trading right up here. It was, closer to $600. We gapped down right here and then traded sideways a little bit down, and then we had another gap down. Well, it was at the second gap down that really the buyers started stepping in. They just realized it was just too great of an opportunity to own a company that would eventually work through its issues and rise up. Another clue to look at right here is the RSI. You see right here, 28. So we are less than 30, and that means that we are oversold. So all signs point to an eventual recovery, and as long as the hits can quit coming, it'll be able to find its footing, and then I think the stock will, in short order, return to its glory days at some point. But right now, we're just mainly interested in the premiums that it provides, and we can get some really good premiums, so that's what I'm going to show you next. For this sold put, I am going to go ahead and go about 1 month out. So June 20th is going to be my expiration date. Now, when we took these trades in the community last week and next, we did not have to go as high as I'm going right now for you on the chain, but it's because we got into these plays earlier. But let's look to see what would be a reasonable sold put at this point. Let's zero in right here at the $300 strike price. So it's currently paying around $1,430 to take this trade, and there is a lot of volume and open interest. The delta is a little higher than I typically like. It's 0.35. However, it is very beat up right now. And so with that being said, it's more than likely an okay trade to take based on where it is in its technicals. But if you were to put on this trade, you'd have to be comfortable owning the stock at $300 a share if in fact it continued to pull down and you were assigned the shares. You would be paid quite handsomely for taking this trade, and you could look at an adjusted cost basis actually under $300 when you consider that you are getting about $1,400 in premium. So what will happen as you get to expiration date? If you're well above $300 in this $1,430 in premium, this option premium will go down to zero, meaning you'll get to keep the entire $1,430 and your play will expire worthless. Now, if we do breach this 300 and we start heading down, that's the risk because this is going to take $30,000 to put this trade on. Now, you could do like I like to do sometimes if United Healthcare keeps heading up or it stalls out where it is now, then this is going to rapidly decline and you can buy it back, giving up some of the premium you received, but releasing your cash to do another trade earlier than a month from now. So you can decide how you handle this, but with being paid $14.30 a share, this is a trade that I personally would take. To put on this next trade, which is the put credit spread, and this would be for accounts that have about $5,000 in it. Now, you could lower the amount of contracts if you don't have $5,000 to trade with, but I'm going to go down much further on the option chain. I'm going to stick with June the 20th. But for this trade, since it's a directional bet, I'm going to open the initial trade at the $260 mark. So right here, this is the put that I'm going to sell, but the protective part of the trade will come from the other piece of the trade, and that's going to be the put that I buy right here. This is the $250 mark. And so the way you look at this, you are going to get a credit for this trade, and the credit is the difference between $4.15 and $3, this one right here. The risk or the amount that you would need to place this trade is the distance between $260 and $250. So that's $10. So each of these spreads is a $10 wide spread. So it's going to be $1,000. And in my example, I am going to do 5 of them, hence the 5,000, and you'll see what kind of premium you'll get for that. If you were to take this trade setup, then it looks like you would be paid about $110 for each of the spreads if you want to do one. But what I like to do, if I have a bigger budget, I like to adjust my contracts to 5. So here's my contracts right now, and if you preview it, you can see what happens. I'll get $550 for this trade. It is showing here $4,450. It's taking into account that I am getting a credit, but $5,000 would be what you want in your account to actually open this up. Now, the reason that this is so lucrative is it's only requiring $5,000, but you're getting $550 in a short amount of time. It's in another 4 weeks. So that would equal 132% annualized return. And that's why it's very lucrative, very tempting, but you definitely want to limit your exposure because, like I said, if this starts working against you and it looks like we're going to breach that 260 as we're closer upon the expiration date, it's very hard to get out of this without being hurt financially. Now, if you're with me trading with Ashley, there is no trader left behind. In fact, I just did a video yesterday where I revealed where I have over $1.5 million invested in some quality stocks. If you want to see that complete lineup, you can watch that video right